Welcome back, folks, to Investor Diaries. Well, before we start, if you've not already done so, please smash the subscribe button right now to ensure that you receive the latest and greatest content from Investor Diaries.
Now folks, today we're going to talk about a company that is creating waves in the hyper-personalized healthcare management space. Yes, we're talking about Accolade, and we'll talk all about this company in today's video.
Alright, so Accolade is a company that's based just out of Philadelphia, and the company is involved with developing, maintaining, and enhancing technology-enabled solutions that help people understand, navigate, and utilize their healthcare system and the workplace benefits.
Accolade's platform consists of cloud technology and multimodal support from a team of healthcare assistants and clinicians. The company provides a healthcare information platform for enterprises and its enterprise end users. The comprehensive platform can provide all healthcare information in one integrated system for its employees.
Alright, so let's talk about Accolade. It went public in July of 2020, and at that point of time, its stock price ballooned to $60 a share. Now, mind you, at that point of time, the sales of the company was only at 133 million, and therefore it was a rich valuation or highly inflated valuation. Thereafter, truth prevailed and the stock price has taken a massive beating, and at the time of recording this video, the stock price was languishing at $5 a piece after a very disappointing Q4 result.
And on that note, Appy, the company recently disclosed their Q4 results. That was on April 20th, and it was, like Appy mentioned, disappointing. The company reported a net loss of $34.6 million or 51 cents a share from $4.73 million or 9 cents a share a year ago. And this result missed an average per share loss estimate of analysts of 40 cents according to FactSet research.
As far as revenues are concerned, it rose 58% to reach $93.76 million, and it actually beat the FactSet consensus because it was somewhere around $91.6 million. But if we were to look deeper and look into the financial projections of the company said that for the year ending Feb 28, 2023, it expects revenues of 350 to 365 million. And this is kind of a little concerning. Why? Because the analysts expected that the company would announce projections to the tune of $387 million.
And Appy, to make matters worse, the Accolade actually announced that a large customer, which was later disclosed to be Comcast, would be ending their service relationship with Accolade by the end of 2022. Now, this was a huge disappointment. Comcast was a long-time customer. It actually became the customer of Accolade around 12 years ago, and it represents approximately 10% of their total revenues.
So this is actually pretty concerning. The chief executive, Rajiv Singh, actually tried to dispel all of the skepticism around this, and he said that this was an isolated event because historical retention rates at Accolade is more than 95%.
That's right. The company has done a solid job expanding its user base and the total addressable market by adding new capabilities into its platform.
Alright, so let's talk guidance. The company provided a guidance for sales between 90 to 93 millions for Q4 and between 306 to 309 million for full year FY 2022. Now, this is slightly up from what it had projected for last year's guidance. And for FY 2023, the management expects 25% increase in revenues and a reduction in the EBITDA losses.
Now, let's take a look at what analysts are saying about this company. A dozen or so analyst firms have chimed in and around Accolade so far in 2022, including Goldman Sachs and Needham. All have reiterated buy ratings, although with a downwardly revised price target. The current price targets range from $30 to $52 a share.
More importantly, there has been no insider trading since the beginning of 2021. And this is both sides, which is buying and selling. Now, if we look at the cash position of the company, it has about $365 million in cash and cash equivalents against a total long-term debt of $280 million.
And actually, if you look at the third quarter earnings call, the company's CEO projected that Accolade will break even on an EBITDA basis in FY 2025 when Accolade would deliver approximately $600 million in annual revenue. This was a projection of the CEO.
Now, for FY 2023, the analysts have said that Accolade is going to be losing $2 a share, and that is on revenue growth just north of 25% to under $390 million.
That's right. And what this represents is that the company's valuation would be just under 3 times forward sales. This is actually not bad and not terribly expensive for a company with the growth aspect. Accolade has done a fairly decent job in diversifying its customer base since it has gone public.
And an interesting stat, at the time of going public, the largest customer of Accolade represented 25% of the revenue, whereas the top 4 represented about 60% of overall revenues. When we look at the situation today, it's encouraging to see that there is no single client who actually captures more than 10% of Accolade's revenues.
And Happy, another side note that we have to mention here that Accolade is a Cathie Wood stock and it is part of the ARK Genomic Fund, which trades under ticker symbol ARKG. So Cathie Wood firmly believes in the stock and firmly believes in the company's innovative prospects, and there's going to be some upside from that whole innovation growth funds perspective.
All right, it's an interesting point, Nitish, but let us not forget that the ARK Invest main flagship fund is actually now trading below $50 a share, and that is concerning. So I wouldn't just buy this stock because Cathie Wood is buying this stock.
So now, what do we think of all of this? What we wanted to convey is, although the company Accolade holds great promise and is solving problems in a very interesting space, this stock is going to be battered for a long time for 2 reasons. 1, the execution prospects, and 2, the overall macro environment like Appy was just referring to. The whole ARK fund is down 50%. The tech stocks and the SaaS stocks are battered for a long time, and we don't see this macro environment changing at least towards the end of the year. So for 1 full year, this is going to be pretty bad.
And let us not forget, folks, that the stock was over $60, it's close to $5 right now. Who knows, it might go to 0. So we are not recommending the stock, folks.
That's right. Our suggestion would be to add the stock to the watch list and see how things evolve. We would like to see 2 things improve. 1, the execution of the company, and see if the company can achieve or at least be on a path towards profitability. And 2, the overall macro environment with respect to the interest rate hikes and how that is going to affect the whole SaaS, tech stocks, and the NASDAQ 100 stocks. Once these 2 things improve, then it might be good to put this stock back on your radar. But for now, it's a pass.
And that's a wrap, folks. Please let us know your thoughts on the Accolade stock in the comment section below. And as always, stay tuned and stay focused. Thank you.
Thanks, everyone.